So we're going to close up today with Game Off, which is homebuyer mortgage demand super off. A troubling sign for spring market. There's actually not a lot of like meat to this article because it's kind of pointing out the obvious for us. But I did want to just kind of reference that I'm not sure how much of the mortgage demand plummeting is people self-selecting out versus them like having already tried once, been denied, and just haven't come back, or been denied. So I don't know what you want to weigh in on that. Like, do you think that there's a large enough part of our population that's just saying, you know what, I already know I can't afford, so I'm not even going to try?
Exactly. Yeah.
You agree?
I agree with that. No, I agree with that. And, kind of like this is a thing with open houses when realtors do it too, right? Usually the people that come to your open houses, the majority are like, this has been proven many, many, many years, are going to be the looky looks, what they call it. It's people who already in the neighborhood have the same type of home and like, let me just look what they did.
The nosy people.
Right. I don't want to say nosy. It's just people who are curious to say, like, let me see, one, what the home is selling for because they're probably unaware of that. Second, let me see what they've done with their home. Since we have the same one, did they break a wall? Did they make more space there? What does that look like? So I can get good ideas. Yeah, exactly. So I think, to put in perspective in the mortgage, I think a lot of people, we've been approving a lot of people, but once we give them the payment, it's like, whoa.
Yeah.
Whoa, wait. I can't pay $7,000. You know what I mean? I'm used to paying right now a rent right now, $2,800. And I just had one right now, $2,800.
Yeah, payment shock.
And he's like, my payment's $7,800.
Oh my God.
Right, $7,800. So he's like, even though he could afford it, his income was like $234,000.
Jeez.
And it's just that's too much.
But a $5,000 a month difference is a $60,000 salary job annualized. That's crazy.
Exactly.
That's a payment difference.
And so those are the things that we're seeing, right? Even the people that are in the more affordable, in the $500 to $600 more range, we got to keep in mind their rental payment is a lot less too, and now they're looking at a payment $55,000, $6,000. It's like, whoa, like that's where the reality hits in. So a lot of people I feel like a lot of people are also getting approved. They're just looky looks.
So this is where I get a little bit conflicted because we talk a lot about a certain subset of topics. And I mean, we're already kind of cornered because it's mortgage and real estate related anyways. But what I mean is like when we talk about inventory, like we need more inventory. Well, but with that inventory needs to come demand. We go, well, there's lots of demand because there's, there was a couple weeks ago, there was an open house where like 50 people were at it. And there's another open house with like 30 people at it. We're like, wait a minute. They can't all be looky-loos. Even if you take half of 50 and go 25. Okay, let's say of those 25, half of that are qualified. 12. Only one person's still going to buy the house.
Yeah.
That would leave, in this example, 11 more people back out looking again. So I kind of like ebb and flow a little bit. Like, oh, it's an inventory problem. Is it really an affordability problem? It kind of says it's an affordability problem. Yeah. But is it if all these people are out looking and there's a line out the door again? Like, you know what I'm talking about?
Yeah. I mean, again, it's not everybody. There's some that are pulling the trigger. I know when I get people qualified right now, I tell them, pat yourself on the back. You should be very proud.
Yeah.
Because we've been at the 2025 already started at its worst affordability.
So what do you think spring's going to be like then? Because I mean, the thing in the article is like, hey, this is a troubling sign for the spring market.
Appreciation, last week it was worse than expected.
Yeah.
Inflation.
Yeah,
I'm sorry. Yeah. Inflation was worse than expected. We're not going to see rates going down right now anytime soon. It can't. It can't.
Remember last year I was talking about how I think the quarters has shifted forward by a quarter. Like our summer happened in the fall, or like our spring happened in the summer and our summer happened in the fall. By the traditional sense of the definition, like spring buyer's market, I don't think it's going to happen. I think it's going to be summer again.
Yeah.
So I don't know if it's completely the dial has shifted that quarter permanently, or maybe it's just temporarily because of the variables. But I think once again, we're going to have a weird spring. And then we'll see summer be that kind of uptick just a little bit. And then the fall again. The fall will be busy. Our fall was way busy. Remember August of last year was way busier than June
but that was
and July.
Went down.
I know it was, but it's also at the same time that people are trying to also get wherever they're trying to get before school starts. So it's kind of those both at the same time.
Yeah. I mean, just to look at things, inventory was at 25% higher than, this time around than last year.
Right.
Right.
Mm-hmm.
And here's another thing that most people don't know, but the whole nation has what's called a conforming loan limit, right? So anything that is below the conforming loan limit, the interest rates are more in your favor. That's where you can go with, 3% down, 5% down, and it's just you have more favorable terms as far as interest rate. So in 2025, it got increased to 806. Yep, In 2024, that was 766. And in 2023, 726. So the reason for this is because already our government's anticipating that home prices are going to go up, right? So when people are telling me right now, Will, should I buy right now? What's your take? I always say, listen, not because I'm under the lending, but if you could afford now, buy now, right? Because what's going to happen is I know we have in 2022, we had 240,000 homes available. And that's when we started seeing people putting $100,000 on top of whatever. We don't care. All the people we had a lot of people buying second homes from San Francisco or either just selling and coming over here and saying like, damn, I'm getting way bigger. I'm going to put $100,000. I don't care. This is going to be my forever home.
Right.
I'm retiring soon.
Yep.
So that's the kind of impact that we're going to start having. So luckily right now we have 635,000 homes, which gives more options to the first-time home buyer. And at the same time, I know it's a stinker that you're going to have a higher rate. But remember, you could always refinance the rate, but you can't buy that same home for a cheaper price later down the line.
You can't buy it cheaper in the future. Yeah.
So that's the thing. And if you look at the data, conforming limits continue to go up. Because you remember when we first got in this industry, 417 was the norm for years.
It was 417 forever.
Forever. It just seems like in 2013, 14, it started kind of changing, Yeah. And so, but it was like that forever.
Yeah. I don't actually remember the first year that it went above 4. I don't remember what year it was. I'll have to go back and double check because I haven't locked that number in. But I mean, just you mentioning it went from the high 700s to all the way up to past 800 now. That's an indicator. That's like a shot across the bow, everybody.
Yeah.
We don't expect prices to decline. And we're not seeing prices decline. So, and again, the conforming loan limit is a different basket of money than your jumbo market. Where the scarcity of the money is what drives the interest rate higher or lower. So in that conforming bucket, there's more players in the game, there's more money. And that's also where you have the government agencies behind it, Fannie Mae, Freddie Mac, and that kind of thing. So I didn't want to bring this up to talk about, but I don't know what's happening with them next. I don't know what's going to occur with them because, again, here's these government agencies and everything's under the microscope right now. So I have no idea what's going to happen with that either.
They may just freaking, leave it out, put it in conservatorship, and so.
Yeah, that was a conversation we had a couple of years ago. Remember that?
So it may be getting closer to that.
Out of conservatorship.
Yeah.
Oh my gosh.
So that's the thing, right? Right now, it's going back to the, the buying. It's like you should be buying when nobody's buying. And it comes back right here. Home sales are running at a near 30-year low. And house prices naturally continue to hit record highs. That's telling you something. So these people who are on the fence and you're already approved, get out of that fence. I'm telling you, buy when nobody else is buying, sell
when no one's selling. This reminds me that I think it's a Warren Buffett quote, isn't
sell
it?
when everybody's buying.
Oh, well, sorry.
It was like, when Henry Ford heard the shoeshine boy talking about stocks, he's like, this is when I'm selling.
Yeah.
You know what I mean? You got to do the reverse.
What's the Warren Buffett? It's be greedy when everyone's fearful and be fearful when everyone's being greedy.
There you go.
Something like that, right? Is that the term?
Yeah.
I think that's the quote. If I have it wrong, you can blast me in the comments, but to take it easy. I know I could look it up. I'm not going to look it up. You can look it up.
Yeah. But no, thank you for this.